let me start off by asking you guys whether if you actually want to find out how my weekly forecast from last week came to pass for this week, let's say. Now, if you do not want to find out, get lost. If you do want to find out, grab your popcorn and let's get into it. Okay. So last week on Sunday, or was it on Saturday? I forgot. We had this. We had price action around here. Okay. And what we saw was we were looking rather for price to head up into this inverse fair value gap and then down. But it had other plans. That's fine. That's fine. Why is that fine? Because see this here, this low. This is something I forgot to actually take into consideration. That low is a breaker. Okay, that low is a breaker. And even though we did not get the pinpoint inverse fair value gap, I told you guys they're going to come here. I told you guys that. Why? Because whatever liquidity, whatever price action that's happening here is only one for a pullback. Okay, it is only for a pullback. That pullback is basically going to give us a retracement and then a sell. Okay, so every news driver this week from CPI to PPI, we saw a bearish reaction. CPI was anyway bearish for the dollar, but PPI was an initial bullish reaction followed by a revision of the data. So when we have data being reversed, it's very obvious. You can fade the trade, you can fade the direction, and you can profit immensely. You can have that as a model in and of itself, a high probability trading model that's based off of news revisions. Okay, but all in all, you can see clearly, right? Clearly, you can see that whatever I told will come to pass actually did come to pass, minus the fact that we did not use the inversion fair value gap. So basically, everything happened according to plan except for the inversion fair value gap bit. Okay, so now I'm pretty sure 99% of the mentors on X/Twitter, Instagram, and YouTube, they do all of these weekly forecasts. And they show nothing, literally nothing, to prove that they even took action. Well, luckily for you, I document all my losses and my wins with my one-on-one students in the Discord. And here are a few of the wins and losses that I took this week. In 3, 2, 1, voila. Cool, right? I execute based on what I say is going to happen. I don't see a lot of people doing that because all of the excuses that I see online is, oh, I missed that. Oh, I wasn't on the charts. Oh, I wasn't this. Oh, I wasn't that. Excuses, excuses, excuses. Okay? Damn excuses. Right? Now, putting that aside, let's take a look at how the dollar delivered to my target. Actually, it didn't really deliver to my target. Took out this low, right? And there wasn't enough volume to cause price to hit this sell side liquidity pool, but it's a guarantee that price next week is going to hit this. Okay. Now, when we are considering how price is going to deliver, we have to consider the economic calendar. Now, the economic calendar that I use a lot of the times is investing.com. Why? Because they have a feed that shows the data revisions as they happen. Okay, investing.com they show, or they have a feed that shows the data revisions as they happen. So you will understand that any price move that's happening, if there's a sudden reversal, you know that it's because of a data revision. So by using investing.com, you can keep a close eye on whether they revise the data or not. Okay. Now, we have all of this going on for us, right? So we saw that, okay, you know what? Let's talk about what price used. Price used the breaker. Enough said and done. Price used the breaker, right? But how did it move down, right? How did it move down on a lower time frame? So let's jump down to the 1 hour. Okay, let's jump down to the 1 hour. And what we will do is we will divide the days up to its parts, right? 6 o'clock to 6 o'clock. Okay, so Monday, Tuesday, Wednesday, Thursday, Friday. So we can see Monday, we had no news driver whatsoever. Okay, Monday, we had no news driver. So price is going to initiate the weekly range by taking out sentiment-based traders, meaning people are short. So price is going to take out people that are already short until it hits a key level. So everyone else above over here, they're safe, right? So the key level is a breaker here, stacked by side. This double top caused a new low. So when we reverse with the CSD candle here, right? When we reverse, we have a CSD candle also over here. You can take a buy on the dollar index and you can take profit right there. So why would you take profit right there? You'll take profit right there because that's a key level. Okay. And there's a double top liquidity pool that caused a new low, making it a prime spot for reversal. Okay. Double top that caused the new low, once raided, is a prime spot for a reversal. Opposite is true for the other side. Okay. Now, that aside, let's take a look at how price moved within the scope of my concepts. First of all, let's take a look at the CSD candle. Okay. So CSD candle, we understand in this case is going to be a low, 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 price run higher, right? So when price broke below this low, the only thing that you are interested in is this candle right there. That is your CSD candle. Sell over there, stops above this high. It is as simple as that. Okay. And from here, if I understood that, okay, you know what, we are going to be bearish this week, how can I use the natural projections of price to project a possible weekly low? How can I do that? Here's how. This is the initial CSD, right? That happened. Take that range, do that. Now, you get the Dublin theory proportions right here, this one and this one. This is 3 standard deviations, 6 standard deviations, 9 standard deviations. That's pretty much it. 9 standard deviations, right? So because we understand that we have news drivers, initially you're going to be expecting price to be delivered maximum to the 6th standard deviation. Okay. But you got to take into account the news. Let's say in case the news suggests that, oh, yeah, we're going to be even more bearish, then 9 standard deviation is the max that you can go. Okay. Now, that is from the very high, from the very CSD candle. What if you were to take the structure itself? But the question is, what structure? Right. A structure that caused the reaction. That means, see this breaker here? This one? You're going to take that breaker because price reacted from there. Take this low, drag it all the way up. Your focus is still 3, 6, and 9. So here's 3 standard deviations. How about that? How about that? Why the hell is it stopping there? Now we have 2 ways of looking at it. You can use a CSD candle, or you can use a structure that gave a key level that in turn led to a reaction. Meaning, now look at this carefully. For example, let's say you have my manipulated range, right? This one. Now let's say price reacted from this range and went down, came to the 50%, like so. Then you are using this entire fractal range to project 3, 6, 9. Now, what if price does this, taps and runs? you're using the range that it tapped from here to there. 1, 2, 3. Okay, 1, 2, 3. That is what you're going to be using as natural projections. Which one you use depends on you. Okay, if you want to utilize the maximum standard deviations, you will use the CSD candle. If you want to keep it simple and finish it off at 3 standard deviations, you'll use the range that price reacted from. Okay, now that aside, how would you have taken sales in the dollar index inside of this range as we were moving down? What can you do over there? You can simply grade the price swing from the top to the bottom. Okay, 25% somewhere here is a CSD candle, price uses it. 50% over here is a fair value gap. Okay, redelivered, rebalanced right there. We never hit the 75% at that point, so we can still use fair value gaps. In this case, we have an inversion fair value gap here. Right there. Right there. And once we hit the 75%, you just let it go. Price is just going to run to terminus. In this case, from a graded price swing approach, the terminus is this low. Okay, that terminus is that low. So that's all in terms of how price was delivered using my concepts. Very, very simple. CSD for POI selection, CSD for natural projection, manipulated range for valuation, manipulated range for natural projection, graded price swing to see price location and what you can do in price based on that location. Okay, what you can do in price based on that location. So let's go back to the daily. And what we'll do is we will now do the weekly analysis for next week, right? So for next week, what we're looking for in price is we're essentially going to be looking for the dollar index to take out this sell side. Okay, for the dollar index to take out this sell side. And in terms of the news drivers that we're going to have next week, okay, in terms of the news drivers that we're going to have next week, Fed Chair Powell is speaking again on Monday. So you do not want to be taking any trade until he speaks, unless you understand the sentiment. Okay, if the sentiment is bearish, price will try to hunt buy-side liquidity before dumping. Tuesday, we have retail sales and core retail sales. Wednesday, we have CPI for Euro, GBP, and we have crude oil inventories for the USD. Thursday, we have ECB interest rate decision for the Euro, Philadelphia Fed manufacturing index for USD, initial jobless claims for USD, and the ECB press conference for Euro. That would be it. And that is going to set the tone for the Friday's price action, because Friday we have no high impact news driver. Okay, Friday we have no high impact news driver. So given all of that, since Tuesday to Thursday we have news drivers, we could see something like that. Now, why am I not focusing on this sell side? Yeah, why am I not focusing on this sell side? Because we have to see what the data says, right? Because as far as we know, in terms of what Mr. Powell has to say, he's talking about rate cuts. He's talking about rate cuts. Okay, because now he's saying that unemployment is cooling off. That means people are getting employed. If employment is going up, or if unemployment is decreasing, right, it means that he would need to stimulate the economy, right, to enable all of these people to be able to borrow in order to increase the aggregate demand in the economy. Okay, because look, if people can spend money, it means the demand for goods and services are going to increase. Therefore, the economy is going to grow. Okay, that is what they want to do in order to stimulate the economy. And if people spend their money, that means the tax revenue that the government gets also increases. Why? for the taxes added on goods, like value-added tax and whatnot. Okay, so with rate cuts like that, coming in like that, we could see the dollar still plummet. Okay, but we got to take it on a data by data basis. So for now, we are looking at this sell side liquidity pool to go, and if we are lucky, we'll get this one also. Okay, ideal situation would be for price to take this out and start heading up. But with Powell talking about rate cuts, we can easily go down here. So what we need to do is we need to wait until Monday and see the direction in terms of the sentiment that Powell is talking in. If he says rate cuts, then down we go. If he's trying to be neutral, if he's saying no rate cuts, if he's saying rate cuts are not necessary, then up we go. Okay, this is the only if then that scenario that we have. Okay, if Powell was not speaking, this guy is melting down. If you were to ask me, I'll say 80% down, 20% up. We will let the data do the talking. Okay, we will let the data do the talking. Okay, so that's it, guys. I hope you found this insightful. Okay, now let's do something special and let's engage with one another. From all the concepts that I created, except the graded price swings, because that is something that ICT created, from all of the concepts that were used to explain price delivery to you, comment which one was easier for you to understand. Was it the CSD candle? Was it true market structure? Or was it the natural projection? Maybe even all of them are now easy for you to understand. Let me know. So let me know in the comment section down below, right? And that said, I'll see you in the next one. Good luck and good trading. Bye-bye.